One of the big trades going to 2017 is how the emerging markets are going to cope with a stronger dollar and just what role emerging markets are going to play in continuing to see what little growth we have around the world at the moment. Mike Ingram joins us now from BGC Partners, where he is taking a look at the emerging markets and where things are going in 2017. What should we take with us from 2016 into 2017? What do we know that might take us through?
Well, there are glimmers of hope in the emerging markets within the course of 2016. This is the year that EM came out of a 5-year bear market. And there are hopes that a Trump presidency will help to turbocharge that recovery and the performance of those emerging markets, securities markets. But I mean, there's a massive question mark out there as to how this will actually play out. Of course, Trump is very much pro-growth. He's talking about corporate tax cuts. He's talking about personal tax cuts. He's talking about deregulation. But the big question is, to what extent is emerging markets going to be able to participate in that reflationary policy? What does America first actually mean in practice? And there are now signs that actually the glass may not entirely be half full as far as the market is concerned, because of course the markets have taken Trump at his word, saying, well, look, I'm going to put these stimulatory policies in place. But there are indications most recently, current spat with this drone in China, for instance, that he's going to take a very aggressive course in terms of trade policy. Now,
But surely we knew that already, didn't we? Because, I mean, he went into the election saying that this would be a big issue with the relationship with China.
Well, we knew that, but I mean, within 48 hours, the market was extremely selective. I mean, always remember, we knew all of this going into the election. We were told that it would be an unmitigated disaster for the global economy and for markets. And here we are, S&P 500.
Nice.
Yeah, well, exactly. So, markets are fickle, and believe it or not, market commentators could be quite fickle as well. But I think, as I said, the market's been quite selective about what it wants to take on board and give Trump credit for.
Let's take China in some more detail.
Yeah.
China is a big enough economy, surely, now to stand on its own 2 feet. We still call it an emerging markets economy, however you define that. But China has a lot of internal domestic demand now, doesn't it? How reliant is China still, as an emerging market, on the States?
Oh, very much so. I mean, in fact, I would argue that the rebalancing act from investment, mainly domestic investment, and net exports back towards domestic demand, the consumer, has actually regressed over the last 12 months. We have seen, given the very ambitious growth targets that the Chinese government sets itself, it's to some extent it's created a rod for its own back. So we have to hit this number, and when the traditional or the desired drivers of growth aren't there, if household domestic demand isn't there in sufficient quantity, well, they're going to have to top up from somewhere. And where have they topped up? Again, they've topped up from an expansion of domestic credit, some of the domestic restructuring they're talking about, perhaps scaling back on some of the heavier industry, metal bashing, etc., which would otherwise cause unemployment. They've backtracked on that to a certain extent. So the balance is undoubtedly better than where we were 3 or 4 years ago, but it's not job done.
But China's racked up enormous debts in that time.
Yeah,
how is that going to play out next year?
Mark Carney, in the penultimate Monetary Policy Committee meeting, referred to the build-up of Chinese debt, domestic debt, as extraordinary. And this is somebody who's not generally given to hyperbole. And, as far as we can see, that we've never seen this sort of rate of build-up of domestic debt, certainly within emerging markets, and something unpleasant not happen a few years down the road. I think that the saving grace to some extent with China, ironically, is because you have these domestic savings, this big cushion of domestic savings, which of course is foregone demand, shall we say, by the consumer, which is actually China's trying to stimulate. That means that you're not going to see perhaps the Chinese economy completely fall off a cliff. But it's a massive drag. We all know that there's a much bigger non-performing loan problem in Chinese banks than they're willing to admit. And of course, you've got the ongoing growth of the shadow banking industry.
Let's just quickly move on to another economy I want to talk about is Russia, one of the biggest non-OPEC producers of fossil fuels. We've seen that centre stage with the recent negotiations at OPEC. How do you feel about Russia next year?
It's looking quite a lot better, actually. So to some extent, I've talked a little bit about the possible trade shock to global emerging markets, but to some extent, Russia went through this 2.5+ years ago on the back of sanctions. And of course, the signals from the Trump administration, you got Rex Tillerson, being providing he's confirmed by the Senate. Yeah, friend of, chairman and CEO of ExxonMobil. And of course, the oil macro, at least for the time being, is looking reasonably supportive in terms of the cuts which OPEC says it's going to implement and non-OPEC.
So did you see Russia come out of recession next year?
It should do. It should do. Although at the moment the consensus forecast is going to be relatively anemic growth, maybe 1.5% perhaps. But as I said, if you look at the top-down environment, if you look at you're still seeing commodity prices generally being relatively well supported. A lot of that is embedded in the Russian stock market. You look at the geopolitical environment; it's looking, for better or worse, it's looking better for Russia right now. So all of that should be quite supportive of Russia, at least over the short term.
Yeah. How about likes of Brazil going to the South American economies, one of the largest there? That too has been in recession. Do you see a recovery there in Brazil, or is that going to stall?
Well, there's obviously a commodity thread to this as well, and actually Brazil is one of the few emerging markets where you've seen earnings estimates actually bump up over the last couple of months. That said, it is more of a domestic demand story than Russia, I think. Certainly as far as the stock market is concerned. I mean, the thing is, from a stock market perspective, the vast majority of it's Petrobras anyway, so it's all proxy. I would say that the real economy is in much worse shape. They need a lot more fiscal retrenchment, budget cuts, in order for people to feel very confident in going into that market right now.
I want to get on to Mexico, on the doorstep of the US. Of course, that too, like China, came up in the pre-election talk and so forth. And now Donald Trump's got in. It certainly didn't look like he's going to be a friend of Mexico, want to build this wall and so forth.
Yep.
How is the Mexican economy going to react to the inauguration of Trump next year and the relationship? How's that going to develop?
Well, I think you've already seen that to a large extent. I mean, in the performance of the Mexican peso, I mean, it was one of the biggest moves that we saw in the first 24 hours after the election result came in. I think as I said, there's a lot of unease as to what trade policy is going to be under a Trump administration. The market has taken, up to this point, a relatively constructive view on this, even though, of course, as you quite rightly said, Trump has indicated he's no friend of Mexico, he's no friend of NAFTA. He's talked about, building a wall, virtual or otherwise, and at the end of the day, the US is Mexico's biggest trading partner. A rise in oil does actually help to mitigate that, because Mexico is a reasonable-sized oil producer in its own right. But it's looking quite tricky for them. Actually, the devaluation of the currency will help to some extent in terms of exports, but the question is what if they've got effectively no one to export to?
Look, Mike, we've got to leave it there, but thanks indeed for a quick tour around the emerging markets. It's been a pleasure. Thanks indeed, and have a good 2017 yourself. That's Mike Ingram from BGC Partners.